Good morning, everyone. Thanks so much for joining us for the Later Life Benefits webinar today. I hope you can see the screen. This morning we're going to have a. Bear with me a second. I'm just letting a few more people in. Sorry, bear with me. We're going to have an overview of welfare benefits for later life and the administration of them. It will be a brief overview. Obviously, we've only got an hour. It'll be a refresher probably for most of you. But what I would say is we'll also look a little bit more closely at the disability-related benefits and pension credit. I know many of you are already familiar with this, but I know that you're sort of looking for a refresher and any updates. So we'll do some updates as we go through. There'll also be the opportunity for questions and answers at the end. We've got a couple of questions already actually that have been sent in. If you should be able to ask a question or put your hand up. So please, by all means, do that. If I can answer it as we go along, I will. Otherwise, it might be that we leave the questions till the end if you're happy with that, and we'll address them. But by all means, put them into the chat box or raise your hand or ask a question throughout. That's fine. And if I don't answer them, I haven't forgotten them. We'll leave them. We'll leave them till the end if that's all right. So that's how we're going to. That's how the next hour is going to pan out. So later life benefits, I thought I wanted to put it in a bit of context really. They account for just over half of the welfare spending in Great Britain. So you can see considerable sums of money there. And it's not surprising, I don't suppose, that the state pension accounts for the vast majority of that, 99 billion, that was last year's figures, actually DWP last year's. I was quite surprised that the disability benefits are a relatively low percentage, but it does put it into a bit of context, I think, because we spend our working lives in and around later life care, and because we're dealing with disability benefits. And when I say disability benefits, I mean attendance allowance, personal independence payment, disability living allowance, so the non-means tested ones, quite a lot. We're advised on those all the time, don't we? So not a huge percentage. State pension, of course, most people think the state pension is an earned right. You pay into the pot, you should get out. It is considered to be a later life benefit. And as you can see, those are the benefits. When we talk about later life benefits, those are the benefits that we mean, rather than the working age ones, the universal credit. Personal independence payment, although payable for people of a working age, is also accounted into the disability benefits for later life. So we're looking at 60 plus really for that benefit in this in context of this amount of money and how that's accounted for government spend. So you're all very aware, I know, that means tested benefits are split into two significant categories. They're either means tested, which requires a full financial assessment, or they are not. Some of the non-means tested benefits are dependent on your national insurance contribution record, and others, like the disability benefits, PIP, attendance allowance, etc., aren't. And you may be surprised to hear that actually the majority of benefits are actually not means tested. There are more non-means tested benefits than there are means tested. So it's worth considering the likes, for example, of the contribution-based benefits for someone who is of a working age, but may well have wealth, because I know some of you are working with self-funders. So we can't dismiss those. The industrial injury benefits, for example, is quite a common one it's often overlooked. Oh, bear with me. This is a little sort of visual checklist. It's in the Care Advice Guide. It's in the guides on the Care Advisor Network too. It's one that I reference quite a lot because it's split into these categories, which I hope is quite helpful for you. as a reminder, something to pin up on the wall. And you can see there that the benefits are actually colour coded. Some of them, the means tested, obviously in red. The non-means tested that are not dependent on a national insurance contribution record are in green, and the ones that are dependent on a national insurance contribution record are there in blue. So hopefully that's a little reminder. And the benefit rates card, it doesn't have this grouping diagram, but the benefit rates card you'll see on the Care Advisor Network under the guides will have these telephone numbers too, as well as um, the benefits. So I hope that's helpful. And you'll have a copy of these slides as well. So just a quick flick through. I'm not going to read these down for you, but these, again, they're in red. So red, do not pass, go. They're means tested, fully means tested. These are the most common ones, the ones that you may well be, we'll talk a little bit more about this morning, pension credit, because that's the benefit for later life, and that's what we're dealing with this morning. So we're not going to be talking about tax credits, universal credit, the transition from all of these means tested benefits into universal credit, because that's more than an hour in its own right. I will touch briefly though on, sorry, bit previous. I will touch briefly later. Oh, now I'm going crazy. On the on council tax support, because have a listen to the podcast. We know that 4 out of 10 older people don't claim their benefit entitlement. Now, many of you will come across older people who are maybe a little bit hesitant, a bit reluctant to claim benefits. It might be a pride thing. I hear that quite a lot, older people are generally too proud to claim these benefits. Actually, I find that the more common reason for not claiming benefit entitlement is in fact a change in circumstances. So as your circumstances change, obviously, so does potentially your benefit entitlement. And it's that transition that's missed, because we've had, oh, don't worry, dear, we've had a check done, or we did, somebody did a benefit check for us and we weren't able to get it. Well, actually now things have completely changed. So it's very often the change in circumstances rather than the pride that creates this lack of uptake of benefit entitlement. And the missed opportunities for benefits are largely pension credit and council tax support. So I am going to talk about those two a little bit later on. And I know you've got questions. We've already had questions sent in about identifying pension credit and premiums, etc. So we'll talk a little bit more about those. And please, by all means, put your comments in the chat box, and we'll pick those up. So this is the one that you're more likely to be dealing with very often, the non-means tested disability related benefits. And probably for many of you, the attendance allowance is the one that you are most knowledgeable and helping people to, whether it be complete the forms or submit the forms, whether it be challenging decisions. But attendance allowance is probably the one that you're going to be most familiar with. So I'll run briefly over that, but essentially it's a fairly bread and butter benefit, really, non-means tested benefit. It doesn't create too many problems, and it's a really valuable benefit for a lot of people. It can, it could be the difference between staying at home and not managing, can't it? Can help people just to buy those extra little bits and pieces, and that's the intention for it. So great work that you're all doing, helping people fill that in. These are the national insurance contribution based non-means tested benefits. So usually anything with statutory in front of it will be a contribution based benefit. The contribution based job seekers and employment, they're all moving over, as you know. We had a Welfare Rights Act or a Welfare Reform Act in 2012, and it's still transitioning. We're still going through the process of that changing even now. It's nearly there, but there'll be little bits and pieces that you'll still have to relay back to this. Again, that's in your care advice guide, and the numbers will be on the benefit rates card in the care guide section of the network website. You'll have all these telephone numbers. But when it comes to administration of welfare benefits, it's always worth remembering you've got to go through to the right place. Because if you don't go through to the right place and you're imparting information, then actually it can have repercussions. So, for example, if there's been an overpayment, if you can evidence that you have informed the correct department, the right place, the right agency, you've given them a material fact, you've told them that Mrs. Smith's been in hospital for 29 days now, and you've told them that in good time, and they still continue to pay and create an overpayment. In actual fact, there's potential there for challenging the fact that they can recover it. So if you've told the right people, and you've given them the right bit of information in good time, then actually they haven't acted on that, then they shouldn't be able to recover it, should they? That's an administration error. So it's worth making sure that you're going through to the right place. And the right place, it's quite clear. If it's pension related, it's the pension service. If it's disability benefit related, it's disability and carers. And of course, they all have their own service centres now. Working age, it's Job Centre Plus. And then you have a service and veteran agency. They don't usually manage benefits as such. So it's usually the relevant disability related service centre and the pension service that you would be dealing with. So the biggie for you then, the non-means tested attendance allowance, you all know that when you first apply for this, you need to be 65 years and over. You have to be present in Great Britain. It isn't means tested, it isn't taxable. You have to have the right to reside. And this qualifying period, so this backward forward rule, they call it, you have to have had that need for at least 6 months and expect it for at least another 6. And the other disability related benefits, of course, are slightly different. That's waived if you are working with somebody who has short life expectancy. So if they aren't expected to live for longer than 6 months, then you can ask a relevant medical practitioner to complete the DS 1500. It's only a section, it's only a signature, and the DWP pays that. It's usually a GP that does that, could be a consultant. Marry it up with the form, tick the special rules box. You don't have to complete the whole thing. Obviously, you have to sign the declaration. The relevant person has to sign the declaration. And send it off together, and then they have to automatically award the higher rate within 7 days. And one of the questions around that is, well, what happens if mum survives for 6 months and a day? You know, they're not going to review that bang on the six months. They're not going to, you know, they're not going to withdraw that on 6 months and a week. But it's if the medical practitioner thinks you are end of life, essentially, that's the purpose of the DS 1500. So I know some of you will be working with families of people with terminal illnesses, and it just saves having to complete the whole form. It's the 28 pages. And you know, it's not about a diagnosis. It's not about what's wrong. It's about the help that you need. What can you show? The help. Show the need for help. Essentially, it's a form filling exercise, at least certainly initially, anyway. It very rarely goes past that stage with attendance allowance. So it's about showing the need, demonstrating the need, not assuming that somebody else is. So when you've got husband and wife or partners, if you like, then what are they doing for each other? I mean, obviously, partners expect to or live their lives helping each other. What would happen if the other person wasn't there? What help would that person need? That's quite a good way of looking at it when you're filling in the form. Well, I appreciate that you know you're doing that and that's what you do because you're married and you've been together 60 years. But what will happen if you know you weren't there and see the faces drop then? So it makes you think a little bit more about what you are actually doing and have taken for granted. And of course, you know, it doesn't. If somebody who lives alone and has never had anybody walk through the door might be eligible for attendance allowance. It's not about whether you have a carer living with you or you are paying somebody to care for you. And the attendance allowance sometimes the name implies the need for attendance, so not necessarily. And there is a little video guide. I don't know if any of you have used this. It might be useful to share with your clients. And we literally have gone page by page through the form. So how to complete the form um, with a little one. We can help with completing benefit application as well, or do a care funding and benefit check to look at a bigger picture if you need that for a client. I know some of you are doing those things anyway, but if any of you need that support, we can offer that. So how much would you get? Well, quite clearly as there, you're probably most of you know this off by heart. I certainly don't. It's uprated annually, of course, and how much you get is wholly determined by when you can show the need for help. Is it through the day and the night? If it's both, that'd be the higher rate. If it's just the day or the night, then it would be the lower rate. It doesn't stand that as you get worse, you get more. It's wholly determined by when you can show the need for help, and that's really important. As most people will say to you, "Oh, this form, it asks you the same thing twice." Yes, it does, but if you look carefully, it's about when, and that's because that's how they decide how much. When do you need the help? And this is very clear. So it's a very criteria driven form, as you know. Is the attention frequent? Frequent is twice or more. Continual through the day is nearly all the time. So if you say Mrs. Smith has to be around for supervision for Mr. Smith for continually throughout the course of the day, apart from on a Friday when he goes shopping, then he goes to bingo on the way back. That's not continual supervision. This is about, is somebody safe? And are they safe if left? And we're talking left for 10 minutes, 15 minutes, put the bins out, go from the kitchen to the lounge, not go out for the day or go out for lunch and leave somebody. Whether that's safe or not, and whether the carer needs that break or not, it is aside. You know what I'm trying to say. So the nighttime need, is it prolonged or repeated? Again, that's not continual, but is it for a prolonged period or repeated? Is it twice or more, or is it once for a longer period of time, 20 minutes or not? So is the person getting up to go to the lav and their partner is laid awake, making sure they haven't fallen down the stairs, they've got back into bed, or they've settled back into bed, or they may need some encouraging, or they might need some placating, if you like. It might be that the covers need to be put back on. It might be that there's laundry to be done. That is it for a longer period of time, even if it's only just once, that would apply. Sorry if you can hear me getting more and more bunged up as we go along. Please excuse me. So attendance allowance, as you're very, very well aware, I know, is for older people. And so what's the equivalent, if you like? Is there an equivalent for somebody who's younger? Well, most of you will remember and still be working with disability living allowance. Disability living allowance was the attendance allowance for working age people. Although the clear difference between disability living allowance and attendance allowance is DLA has two parts, one part for care, daily living tasks, and the other element is for mobility. And personal independence payment is the benefit that replaced DLA. Now, this frame is really important because you will still be coming across older people that are receiving disability living allowance because of when PIP was brought in, because of the Welfare Reform Act of 2012. If you were already 65 in April 2013, or 64 actually, because we can go back 12 months for this, and receiving DLA, and it was an ongoing award, took you past your 65th birthday, then you will stay on disability living allowance. And you will not be invited to claim personal independence payment. So if you're coming across people who are older, 76, 77, 78, and they're getting DLA, that's quite right. And they will still continue to receive that in an ongoing award while they're eligible, and you will upgrade DLA accordingly. So they won't be asked to go on to PIP. Most people have been asked to go on to PIP already if they were of a working age and they were getting DLA. So PIP, personal independence payment, replaced DLA for working age people, not children and not older people who are already 65 and will continue to receive it. So you can see how they compare. Personal independence payment doesn't have the lower rate as DLA did, but the amounts of money are the same. Now, unlike disability living allowance, which was roughly very, very similar criteria to attendance allowance in the day and night uh, point of view, personal independence payment has descriptors, it has tasks, it's about what you could do throughout the course of the day. I've got a couple of, just excuse me for 1 second, I've got a couple of questions coming in. Actually, if you don't mind, I'll leave the questions till at the end because I don't want to lose my train of thought. And unless anybody's got anything urgent, stick your hand up and just remind me, please. So the descriptors will determine whether or not you are eligible. And you can see that actually there are points assigned to each of them. Now, these are the descriptors for what is the care element, the daily living task element, not the mobility one. And the points are cumulative, so you could get 8 points for preparing food plus 8 for eating and drinking. Clearly, that would give you 16, and you would get the enhanced rate. So if you get 8 points, then you get a standard rate. And you can see the only one that has a 12-point rating, an enhanced rating, is the communication. So it could be that you have this significant difficulty and not have the other physical needs as well. Just to give you an example of the first one, flying past that. Just to give you an example of the first one, preparing food, this is just how the points are assigned to that first daily living task or care component descriptor. So yeah, I can prepare and cook a simple meal unaided. That's questionable, but I wouldn't get any points for that. Can't prepare or cook food at all, 8 point standard rate, daily living task, daily living element, care element, and anything in between. So each of the descriptors will have this this kind of ABC for what points are assigned to you. And again, as I say, they're cumulative. I think one of the important things we need to just say about PIP is, of course, you may well be aware of this, but the qualifying period for PIP and disability living allowance is different to attendance allowance and from each other. So disability living allowance, you have to have had the needs for at least 3 months and expect them for another 6. For PIP, it's 3 months, 9 months. So you can see that we're looking at long-term illness and disability. But just bear in mind the qualifying period, because if you are looking at upgrading these benefits, that will apply as well. So it isn't just to a new claim, it's to an upgrade. If you want to look at, potentially suggesting to somebody that that they need to be moved on to an uprate, we need to do a claim for an uprate. Again, the DS 1500, the special rules for short life expectancy will apply to both DLA and to PIP. So you won't have to evidence the qualifying period for those things. And I know that's a whistle-stop tour of disability-related benefits, but I think the majority of you are familiar, very familiar actually, with these ones. You might not be as familiar with personal independence payment as you are attendance allowance, and it's worth getting your head around the descriptors because they are reviewed regularly. And the whole point of moving people from, or changing the system actually with the Welfare Reform Act, was that disability living allowance wasn't reviewed as often as possibly the Department of Works and Pensions would have liked. And of course, what we got as a result of that was that people were beginning to rely on that money, and their needs haven't been reviewed or reassessed. With PIP, they'll be reassessed. So and also the clear difference between PIP and disability living allowance and attendance allowance. Of course, you can't make a new claim for disability living allowance, but the difference between those two benefits is that by far and away, the majority of people who claim this benefit will have to have a face-to-face interview. So not only are the criteria completely different, this is a completely different benefit, so is the application process. So you do the telephone bit initially, you do the nuts and bolts, the names, the addresses, and the bank details actually, um, just looking at eligibility. Are you eligible to actually claim this benefit? Then they'll look at, are you entitled? And the criteria, do you meet the criteria? So then you'll get the form, fill in the form to tell us what's wrong, and then you'll get the interview. Then you'll have a face-to-face interview. And I would usually say it's a good idea to have somebody with you at a PIP interview, and it's definitely worth having somebody with you at a PIP interview for a renewal or for a reassessment, unless it's really clear cut. That would be my advice. And for those of you who are going to tribunal, you'll already know, evidence, evidence, evidence. Not hearsay, not it's not fair. Evidence, evidence, evidence from as many people who are relevant as possible will give you a fighting chance, a good fighting chance at tribunal. Evidence, the criteria, and that's the best advice I could give you. Diarise everything, make proper notes. Care plans are useful. Just keep a note of everything and evidence it all. I hope that helps. I don't want to go into too much detail about appeals, about timelines and deadlines, etc. We've got a couple of care guides on challenging DWP decisions. They may be useful to you. I think most of you will be helping complete these forms, probably not challenging them. Some of you may be challenging PIP. Very rarely do we need to challenge attendance allowance. But if you do, the process for that will be in the care guide, challenging DWP decisions. So hopefully that'll be helpful. Bear with me a sec. So pension credit, this is one that causes some confusion. Sometimes it's one that we get most of the questions on. And I think the best advice I could give to you is please don't get too hung up on it. The calculations, there's a fantastic pension credit calculator on gov.uk. It's very straightforward to use. It's very easy to use. There's some other really, really good calculators online too. And of course, the beauty of benefit calculators is they do just calculate figures that you put in. So they will give you a very good reflection. What you have to be careful of is that you're giving them the right information. And I'll explain that with regards to premiums. But I would say, if you're not already benefit experts, you're not actually expected to be. And it's just about having a really good basic understanding of how this interacts and the passporting effects that the non-means tested benefits of attendance allowance, disability living allowance, personal independence payment, those disability related or qualifying disability benefits have on the amount of money that you need to live on regards to means tested. And that's sometimes the bit that causes a hurdle. So I'll try and explain that if I can in the briefest way possible this morning. And if you've got questions, please just ask them. So in the good old days, it used to be anybody over 60. That's not the case. Now it's about qualifying ages in line with the women's state retirement age. So you will need to put a date of birth into the calculator. You will need to know how old somebody is to know whether they will qualify for pension credit or not. We have had a couple of changes over the last 3 years, which are fundamental, and particularly one, where are we now, 2021, so 2 years ago, when universal credit affects a partnership where you've got one person who is older and one person is younger, universal credit may well be their benefit, not pension credit. And that's significant because pension credit is actually quite a generous benefit for older people. So we'll touch on that briefly, just to bear in mind that mixed aged couples may well not be able to claim pension credit anymore. If they're already on it, they possibly stay on it. But if you're lucky enough in your later years to find somebody younger and you form a relationship, then it might affect your benefit entitlement, and that's worth you knowing. So don't get too caught up in the devil of the detail. Just be aware of that. It's not taxable, and at the moment there is no upper limit to the savings and capital that you are allowed. Um, it looks like that might be changing, and they haven't said exactly when, and we don't know that for sure until it's announced. But at the moment, there is no upper limit for capital or savings, and the first £10,000 of any savings or capital that are included in the financial assessment will be disregarded. Anything over that is assigned a tariff income of £1 for every 500 or part of. I hope that's fairly straightforward, I think. I'm not going to talk too much about savings credit today because we had significant changes with the Pensions Act, and the changes from 2016 essentially mean that most people who became pensionable after that date will not be eligible for this element anyway. It used to be a kind of a little bit of a reward for having made some provision in your later years. We're going to concentrate on guaranteed credit and the interaction with premiums because we're limited for time today, and the calculator will throw up savings credit entitlement. I will touch on a couple of other things that may well affect that, but we're not going to go into the calculations for that, you'll be pleased to hear. So how much do you get and how much do you need before you'd be entitled to it? Well, unfortunately, we can't put an exact number on that because, of course, it's circumstantial. It's about people's circumstances. If you are single, you need 173.75 at the moment to live on, and that's, of course, taken into account your income and any assumed income or tariff income on your savings that are assessable. And then if you're a couple, clearly you need more money to live on. When you say applicable amount, that's essentially the amount of money that you need to have coming in as income and the assumed income on capital every week. These premiums are something that I'd like to talk about. So the premiums, I'm just going to clear one thing up, if I may. Contrary to popular belief, these premiums are not an additional amount of money that is handed over as well as pension credit. These premiums are used as a way of calculating your potential entitlement. So essentially what this table is saying is, forget the savings credit threshold for a moment. What this table is saying is if you are single, you need £173.75 coming in every week. And if you've got that, plus, you won't have guaranteed credit entitlement. If, however, you are, for example, disabled and you are receiving a qualifying disability benefit, you have to have been through the Department of Works and Pensions computer, and the computer and the decision makers have to have said, yes, you are disabled, i.e. you are getting a qualifying disability benefit, and that is attendance allowance, the care, either of the daily living task care components of PIP, or the higher or the middle rate of the care component of DLA, not the lower element of DLA, then you're receiving a qualifying disability benefit. You are disabled, and therefore you need more money to live on, not just in the form of your non-means tested benefit, but in the form of the means tested entitlement too. So those non-means tested benefits can passport you to a means tested entitlement that you didn't have before you were receiving them. So, for example, if you're single and there's nothing wrong with you and you're not caring for anyone, you would need 173.75. If you're single and you're living alone and you are receiving a qualified disability benefit, then they would add 66.95 to 173.75, and that's the amount of money that you would need. I haven't got it written down, sorry, I haven't done the calculation beforehand, should have done, that was remiss, apologies. But that's your applicable amount, your new applicable amount. You would need 200 and whatever that is, 30 something, 40 something pounds a week. Now, if you are single and you are caring for someone that you don't have a disability in your own right, but you're caring for somebody who is receiving a qualified disability benefit, they would add the carer's premium to the 173.75. So you'd get 211 something, wouldn't you? That's the amount that you would need to live on, the single amount and the carer's premium. I hope that's clear. The complication sometimes comes when we have a couple. So if you have a couple and one of the partners is receiving a qualifying disability benefit, but the other one is not, then what you have is a member of the couple who is actually not dependent at all, and therefore the severe disability premium will not be applied to that couple applicable amount. If you've got a couple and both of them are receiving a qualified disability benefit, they're both disabled, they both have disabilities in their own right and they're receiving the relevant benefit, then they will apply two severe disability premiums to that applicable amount. So just a quick recap, these premiums are not an additional amount of money. They are the way that the DWP calculates your pension credit entitlement. I hope that's clear. Please send in questions, because the last thing I need to do is confuse you further. But you could see how the non-means tested disability benefits pass spot on for entitlement to means tested benefits, pension credit, that wasn't there before they received them, or caring. Now, I'm often asked again, well, hang on a minute, I've got a couple, they're both disabled, are they caring for each other? They can't care for each other, can they? Because they are both disabled, I'm told often. Yes, actually, they can. You know, if you've got a couple, for example, you've got one member of the partnership that has a physical disability, and the other member of the partnership that has a mental health issue or needs prompting and reminding and encouraging, it's perfectly feasible for both partners to be looking out for the other one and actually caring in their own way for more than 35 hours, etc. And so if you've got a couple, both with a qualified disability benefit, say for example attendance allowance, so you get two lots of severe disability premiums, so 130 something plus your 240 something, you can see how this is adding up, 300, 400 pounds. They're both caring for each other, so two lots of carers premiums. This is turning into quite a significant weekly income, and you can see why this benefit is often unclaimed, how the circumstances change very quickly and how they change back. So for example, just a very quick sort of running example, Mr. and Mrs. Smith are living together at home. Mr. Smith's already getting attendance allowance. You go in to see them to do a care review or to look at putting some care in place for one and or both of them. Might be that you're doing a benefit check. It might be you're doing a continuing healthcare check for Mr. Smith, for example. And I'll talk about how that's affected in a moment. And actually, you think Mrs. Smith should be getting some attendance allowance. You're quite right. You help them do a claim, and Mrs. Smith gets it. They're both now receiving a qualified disability benefit, aren't they? Immediately, their means tested entitlement has changed potentially. I'm not suggesting that they're going to be eligible, because, of course, it will wholly be determined by a financial assessment. They might have significant income or significant capital that takes them out. But their circumstances have changed, and I would always, in the back of my mind, be doing a new benefit check. Does pension credit apply now? We've got 2 lots of severe disability premium and potentially 2 lots of carers premium, okay? So then, for example, say, for example, Mr. Smith, actually, you were quite right, and you felt that Mr. Smith should be receiving continuing healthcare, and you organise the checklist, and we're not going to do CHC today, but you organise the checklist, da 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 da. You might even do an independent checklist, and actually you fought it and you got it. Mr. Smith is now being paid for by health. Do you think that's going to have an effect? Yes, of course it will. He's going to lose the severe disability premium because he's going to lose his attendance allowance because health is paying via CHC. So with continuing healthcare, if you get funding by health and or in part by the local authority, then the attendance allowance won't apply anymore. Self-funders, of course, will keep attendance allowance, but if continuing healthcare is in payment, the AA will and should stop. In the same way, of course, just bring it a little bit more up to date with COVID funding, etc. In the same way as discharge to assess, while somebody's receiving discharge to assess, albeit short term, the attendance allowance won't be payable because health is paying. So health isn't going to pay at the same time as central government through DWP. So that's how that works. So essentially, what you've now got is a couple, both still disabled, but Mr. Smith's care is being paid for by health. They will no longer have the severe disability premium because his attendance allowance has stopped. And although she's still getting her attendance allowance, he's not. So we're not going to apply one, are we? Because we can't do that. Even though he is dependent, he's getting CHC funding. That's beside this particular point. So their pension credit entitlement has changed significantly, hasn't it? Again, yeah. So, for example, say that works for the next 4 or 5, 6 months, hopefully a little bit longer. But before too much longer, maybe Mr. Smith has to go into permanent care. Maybe Mrs. Smith has to go into permanent care. They're now living alone, aren't they? They're now separated. They're still married, but one or other of them is living in a care home and the other one is living at home. So now we're assessing them as 2 single people. They're no longer a couple for benefit perspective. So we do a benefit check for both of them. And you might find that Mrs. Smith's, that both of their pension credit status will have changed entirely. So we would do a new benefit check for both. Potentially the one with CHC funding and no attendance allowance, depending on their income, of course. It's unlikely, but it might be for the other partner. So I hope you can see just how quickly that changes as the need changes, and that's why we have to keep on top of these benefit checks. I hope that little example has demonstrated how the premiums are used and how they can affect entitlement. I hope so. Just put some questions in the box for me. I think we've kind of covered that. Passporting. Yeah, I suppose it's got to be worth saying passporting. It isn't just about the non-means tested disability related benefits passporting to means tested. It's about pension credit, the means tested pension credit, the guaranteed element, not the savings element, but the guaranteed pension credit, because don't forget that's an income top up. Once you receive that, even if it's £1, it will passport you to other means tested benefits, as it says there, for example, for housing costs, council tax. Pension, if you receive pension credit, then your council tax. So even if somebody's only got £1, it's definitely worth pursuing because council tax is worth significantly more. And that's what they mean by passporting benefits. I hope that helps. Yeah, I'm not going to say too much about savings credit because it has changed. Somebody who's essentially reached the state pension after the 6th of April 2016 isn't going to be eligible because, of course, we got a fixed rate pension, didn't we, from then? And the mixed age couples here, you can see changed in 2019, a couple of years ago. And if you are already receiving it, it may not have changed. But if you come across a couple that's making a new claim, then they will both have had to reach pension credit qualifying age, not just one of them as it used to be. This is an important one, particularly for the financial advisors amongst you. An AIP, sorry, I should have put that in full, assessed income period. So when they brought pension credit out, they determined that actually older people's income, retirement income, doesn't change very much. Well, we know that's not the case, but essentially in the old days, if you had an assessed income period, you didn't have to tell the DWP if your retirement income changed, unless your circumstances changed, and that's still the case. So they don't set AIPs anymore. There will be no new AIPs because it's we're trying to move away from that. They have brought in earlier dates, but the key thing for you to remember here as advisors is you may well still come across people who have pension credit, even with significant funds, on an assessed income period. But if their circumstances change, and the most common one for you will be somebody moving into a care home, that AIP will end. So if they're at home now and they've got significant income, or significant savings is actually more common, you would think, oh, they'll not be getting pension credit, but actually they still are, because they were running on an indefinite AIP because they were over 75 when it was brought in, and they're going to move into a care home, or you are looking at the circumstances changing. Are we able to promote this independent living? What are we looking at with regards to care provision? Reviewing care provision, maybe it might be that you're looking at the options and the what ifs. Then if you're looking at the what ifs with regards to moving into care, please be aware that this might change their funding status, because the AIP will stop. I hope that's as clear as I can be in the short time. Carers allowance, I just want to say briefly before we do questions, because great non-means tested benefit, it's everybody perceives this as means tested because it asks about what do you earn in money, in wages, because it's an earnings replacement benefit. So if you're not earning over £128 a week net, and you are caring for somebody who's receiving a qualified disability benefit for more than 35 hours, then we'd be thinking about carers allowance. The one thing I have to say here as advisors is please stop before we just mention or advise carers allowance, because of course it can affect the disabled person's means tested entitlement. If somebody claims carers allowance and the cared for person is receiving pension credit with a severe disability premium, that will be cancelled out. So you may well be cancelling out their pension credit entitlement, and of course with that they would lose any council tax support. So for the sake of the carer receiving carers allowance, and there's nothing wrong with that, but just be aware of the knock-on effect of carers allowance potentially. And this is the last slide I promised that I wanted to go through, because this is one of the other ones that's often overlooked. It isn't always just about the reduction or the support. So we know council tax support is means tested, full stop. But for those people with means, there are ways that we can get help. And that is usually by applying an exemption, whether it be to the person or the property. An exemption is usually applied to the property, and the most common one for you will be if somebody moves into long-term care or long-term care in a hospital. The property, if it's empty, not empty of furniture, but has no other people living in it, will be exempt, often overlooked. So just be mindful. We're all aware of a single occupancy, but the severe mental impairment, I hate that phrase, but it is the phrase that's used. If you come across somebody who's been diagnosed with mental health illness, then a severe mental impairment, essentially, then there will be a single occupancy or a discount if the person's couple. So they are exempt in their own right then. so their bill will come down. And if it's a physical difficulty where somebody needs a wheelchair indoors to mobilise around, they need a specific bathroom, especially for them, or another room, treatment room, for example, then the council tax band will be reduced by 1. So you can see there are other ways of getting council tax support other than the means tested version. And that's frequently unclaimed. So I just wanted to touch on that one. We're all too well aware of this global pandemic. I don't think many of you are going to be involved with universal credit, so I'm not going to worry too much about that or of the work search. What I will say is that a lot of the disability related applications, interviews and appeals are moving online, and the online appeal is not just around the coronavirus. That's a long-term thing too, so I'm sure some of you are there. So thanks. I think that's kind of wrapped it up. I hope that's helped or refreshed. There's some bits and pieces there. I will send you the slides. Yes, we can help with a care funding and benefit check if you'd like. Hopefully the benefit rates cards will be useful. Hopefully the guides will be useful. You're welcome to download those to use those for clients, and you can have an online access to the complete care advisor, the book. That's only online now. We do it an annual online access to that, so hopefully that's useful. Questions here are, yes, certainly you can, I'll send the slides out and send out a CPD certificate. One of the questions is around discharge to assess and the virus emergency funding. You will know that new packages of care and changed packages of care while we were in the midst of the pandemic were funded by health with an emergency coronavirus funding pot. That ended in September. And what we have now is, and I think it looks as if with the Health and Social Care Bill / Act as of next year maybe, they're certainly moving towards discharge to assess as being part of that framework. So with discharge to assess from hospital, with short-term funding, the benefits, attendance allowance, etc., they will stop. So if health pays for your care with continuing health care, attendance allowance is going to stop. And I think you're very well aware that for hospital stays, 28 days, and then let the DWP know. It doesn't have to be the applicant, the claimant themselves. Anybody can tell the DWP something. But again, make sure you're telling the right agency the material fact in good time, and hopefully that will avoid any overpayment. Any other questions before we've got? Sorry, I'm reading through this. Anybody got any other quick fire questions? You want to just put them into the Q&A box? I'm not sure if we've got a hands up box. Bear with me a second, or if there's a chat box here. Let me see. I came across one. I don't think this is a question, actually. I think this is more of a statement. I came across somebody who, I'm presuming somebody who has had disability living allowance for over 20 years now, in his early 80s. Yeah, perfectly feasible, absolutely. You are going to come across people who have disability living allowance and are older, and they will still continue whilst eligible to receive that. They will not, statement presumed it would be. They will not be invited to claim PIP. I think that's the point that Joanne is trying to make. She's quite right. This older person was clearly 65 in 2013, and they will not be. I don't want you to panic and go off and worry all of your older clients. He will not be asked to claim PIP. But it is worth saying here that we do need to be really careful with DLA, because you can still upgrade it in the same way as you can attendance allowance. It's got a different qualifying period. Of course it has. In fact, it's better. It's shorter. It's 3 months. So you could still upgrade it. It's worth saying, though, that if you have come across somebody who is older and is getting disability living allowance care component, but does not get the mobility component, you cannot apply for the mobility component once they are 65, if they were not already getting it. If they were already getting it at the lower rate, then yes, you can upgrade it to the higher rate. But if they weren't on the mobility component of DLA before they were 65, you can't try and upgrade it and get them on it after their 65th birthday. Does that make sense? Yeah. So this particular person was just getting the high mobility. Okay, so if this person was getting the higher, the point that Joanne's making is she came across a client, an older client, who was only getting the higher rate mobility. Now, my immediate thought for that gentleman was, where were not, this isn't, I'm not pointing fingers at you now, but I was saying, oh my goodness me, where were you all of those years? Because if this gentleman, I presume this is a gentleman. Anyway, he is now, sorry. This gentleman was getting high rate mobility, then he's got some significant mobility issues, would be my suggestion. And that being the case, I think I would have wanted somebody to look a lot more closely at his eligibility or his entitlement to the care components much before now. So it does imply, doesn't it, if he's getting the high rate mobility, that actually he probably would have had some care needs. Possibly we would at least have been able to get him the lower rate, I would think, for some considerable years. So the point here is, can he upgrade this DLA and include the care component? The answer is yes, of course he can. So hopefully, I'm sure Joanne has done, yeah. His family had never thought about it. We were just put in touch. Exactly. It's such a shame. It's such a shame that the advice isn't sought, because we could look at this. Oh, and it's great. You've applied for an upgrade. Fantastic. Perfect. Yeah. And of course, he's needed it for years. The implication of high rate mobility would certainly suggest to me that actually, probably 20 years ago, we would have been looking to appeal that decision, or certainly challenge it in its first stages, because I would have thought probably for 20 years we could have, looked at lower rate at least and then upgraded it along the way. But it is what it is, isn't it? The benefit of hindsight and the beauty of professional advice, specialist advice. So brilliant. Yeah, good example there. Thanks, Joanne. And also to please bear in mind that if you upgrade or you apply for an upgrade of DLA for somebody who's younger and they haven't already been invited onto PIP, it'll move them onto PIP. So make sure when you're doing that upgrade that you're ticking the descriptor boxes and you're looking at the enhanced rate if they're on the higher rate of DLA. Hope that makes sense. Okay. I think that's everything. I think I've covered the questions. So anybody got any final questions or any final points they would like to make, or share any examples that might help in the last minute or two? If you've got questions, then by all means send them in. I'll put them into the forum. But I think we've covered everything. And by all means, if you come across anybody that you'd like us to do a more in-depth benefit check or a care funding check with and for, or if you want to use the benefit rates cards, please by all means do. I hope you found that helpful as a refresher. And thanks so much for listening and taking the time. The sun's shining outside, so yeah, pats on the back all round for everybody. Thanks so much, and I'll send the slides and the CPD certificates out. Thanks very much all, and I'm sure we'll speak soon. Okay, thank you. Bye bye.